All right, welcome back. Let's talk about some corn and see what that's doing for us here. We've been down about 5 cents all day, maybe a little bit more. Let's see if we've got any more relief there, and we don't. It's bled a little bit lower to the downside. That's 7.5 cents lower right now. That's decent. 4.69 3/4 is last. And again, we're just a tick off the lows. We've got about an 8-cent range there now. So we're a tick off the lows of an 8-cent range, 7.5 cents lower on the day. 4.69 3/4 is the price. The month is decent. It's not good, right? So we've had about an 8-cent range. We're right there, bottom end of a 8-cent range. So 8-cent range, bottom end of it. We'll see. Maybe we've got a little bit different story in beans. They have rolled over. Man, everything's weaker. Jan's down 3.5 cents to 13.60.5. About 3 cents off the lows of the day. Maybe 2.5 cents now. That's Jan. 5.5 cents lower in the March, 13.73. So beans rolling over as well. Moving on to the wheat. In Chicago wheat, that's lower too by about 6 cents across the board. Deese is off 5 3/4 cents to 5.70. March is off 6 cents to 5.96.5. So that's a penny off the lows in March. Still kind of plumbing the depths there. Pressure to the downside. Can't find any buyers. Haven't been able to feed the bull. Hard red wheat in Kansas City, that's double-digit losses, 11.5 cents lower. Deese, 6.34 1/4 is last there. 2 1/4 cents off the low of the day. We've had about a 13-cent range over there, maybe a little bit more. 11.5 cents lower, though. 6.34 1/4 is the price. Deese hard red wheat in Kansas City. Now let's go to Minneapolis and look at the spring wheat, down 2 3/4 cents. That Deese contract stands at 7.26. That's a penny and a quarter off the lows of the day there. And we've had about an 11-cent range. So everything's at the bottom end of the day's range, trading a little easier. 3 1/4 cents lower in the March there to 7.42 1/4. That's spring wheat in Minneapolis. Cotton. What do we got going on? That's lower by 125 points. 76.75 is last 8 points off of the lows of the day. That's Deese. All right, let's bring in our next guest analyst. And it's going to be Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. Tommy, thanks for being on the phone or being on the show. I don't know, nothing there to feed the bull, I guess, and we just kind of drift lower.
No, if your viewers are going to be excited about anything, it'd be that you and I both have fresh haircuts and that you just delivered the bad news to them. But you look good. You look good as you delivered the bad news.
All right, you're a good liar. You're a good liar. Go ahead.
In Scarface, he says, "I always tell the truth, even when I lie." Remember that scene?
Yeah, here we go. Yeah.
Then he starts shooting everyone. Well, the truth is, Scotty, we have too much corn, and the USDA is going to tell us that on Thursday. What they're also going to tell you is that 2023 was the year of the fringe state, that we had record crops in many, many states. If you wanna see something that'll probably shock you, if the USDA adjusts the North Dakota corn yield, they're going to be harvesting way past Thanksgiving for several reasons, weather and whatnot, but because the bushels are there. If you say, Tommy, do you still have clients who are harvesting? Yes. Why are they harvesting? Because the bushels are there. Now, typically in an Iowa or Illinois farm, the farm ground's worth a lot much more, and you farm a section or two, or you rent some ground. But up north and other places, either in fringe states, either the acreage is really small and you have to go harvest 110 fields, or up north, they just have that large of fields. It just takes time. So the corn's out there. Obviously, it's so strange to see soybeans up 13 and corn down 2 like we were a little bit ago. We noticed corn rolled over, wheat rolled over, and then finally beans rolled over. The real leader here, the real bull market, is soybean meal. Because as soybean meal was on the high, up 160 ticks, soybean oil was down 160 ticks. And it's just a divergence. Remember how those guys at the Board of Trade, Scotty, used to trade the crush?
Yep.
How there was a dad in the meal, a guy in the oil, and a guy in the beans, and they used to do the, 10 by 11 by 11, and they'd be flying around crushing those beans. I can't even think about it anymore. You sell the soybeans and you buy the meal and buy the oil, or vice versa, and you crush that bean. Now, electronically, we can pull up a ticket that is the soybean crush, and that's been a very volatile trade. It's nothing I trade, but I do watch all the components individually. So lots of action. Biggest thing on my notes I have right here, crude oil down over $3 a barrel. If you were one who needed to get fuel needs locked in, I'd much rather buy crude at 76 than where it was a few weeks ago at 95. Buy dips, sell rips. Back to you, my friend.
Yeah, I mean, that's a big mover today. The interest rates last week, energies today. There was some news out of China. Everybody's kind of throwing the toys out of the pram right now, worried about Chinese demand. It's still there, but they've made some moves that have got some folks a little bit worried, and their economy is not doing very well either, and neither is the European Union. So lots to digest there, but we're going to go away. We're going to need to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading in Valparaiso. We're going to come back and talk more with him after this. All right, it's time for the livestock. Let's take a look at our furry friends and see what's going on. Let's bring up that live cattle board, which is right behind me. There you go. And we've got some losses. That's no good, right? Dace is down $1.05. 180.27's last there, a dime off the lows of the day. A $2.05 sell-off in Feb to 179.92. And that's just 7 cents off the low of the day there. So live cattle bleeding lower. Everything's kind of bleeding lower here today. I expect feeders to do the same, and they are. Jan's off $2.22 at 234.20. We've got about, what, 27 cents to go to the downside there. That's the low of the day, 233.92. So weakness across the board, $1.95 lower in the March, 237.15's last there. Let's bring up lean hogs. Are we getting any? Yeah, we got a little bit of a respite. There's something green on the screen here, and that's going to be the lean hogs. We've got the Dees contract trading up 37 cents to 72.77. Only issue is at the low end of the range. We're only a tick off the low of the day. So there you go. 42 cents higher in the Feb to 76.37. Let's bring in Mr. Tommy Grisafi and see what he's got to say about these livestock prices. Tommy, anything jump out at you there?
Well, since we went on break, a couple things I wanted to tell you about. Overnight, how do you say his last name from Minnesota? The Fed governor, Neil Kashkari. Well, thank you. Don't ask me to spell it, but I know what he said. Looks like the Fed's out there doing damage control because interest rates a week ago were at 5% in the 10-year. Now they dipped down to 4.55. And he said, not only are we willing to raise rates, but don't let 2 weeks of data make you think that we're done. So it looks like the Fed's out there doing damage control. At the end of the year, I don't know that we'll sit around and say, yes, 2023 was the year of the commodity market. By the prices I'm seeing and the volatility I'm seeing, we could go out at bad prices. Since you and I went on break, corn is at new lows, getting ready to take out multi-month lows. Don't forget this corn contract was at 509 2-3 weeks ago. Now we're going to have a 460 something in front of us here in a few minutes. As far as the meats, they are not doing well. That cattle market had a nice rally last week. Terribly disappointing day yesterday. Not doing well today. The cattle guy is pretty unhedged. They're always long cattle. And I don't know that there's enough liquidity in the futures market to get everyone hedged. And everyone loves to be long in a bull market, and then they all get quiet. You could hear crickets when the market goes down in cattle. Back to you, my friend.
Well, it's like you always say, they never ring a bell when we hit the highs, right? I mean, they just they don't
I have
tell
said that before.
You have. It's not a bad saying. And to your point, real quick, we got to go, but the delay in planting beans down south in South America, will that hurt maybe the safrinha corn crop? I mean, is there some life left in corn there? You got about 5 seconds.
We have too much corn. Back to you, my friend.
Okay. It's all about supply and demand. All right. Adam Smith lives again. Thank you very much, Tommy Grisafi. He's with Advanced Trading up in Valparaiso, Indiana, making it simple for us.